Hey everybody, Smart Silver Stacker here. Hope you're doing well. Welcome to the live stream, the second live stream of the day. It's not too often that we do that here on this channel, but today clearly a special day, in the silver market here. Silver was down at the lows of the day about 38%. Gold was down about 14%. This has got to be unprecedented, certainly in dollar amount. Silver right now, even after recovering, down $32 on the day. I mean, that was the entire silver price not that long ago. So there's a lot of weird things going on, and I've had some time to kind of watch the markets here. And there's a lot of strange, let's call them coincidences, with this drop in the silver market. And I just kind of want to explore that and give you some additional thoughts on this move, given the fact that the day is almost done. The stock market is closed right now. It's 4:43 p.m. Futures trading will be done in 17 minutes until, the weekend. The weekend is coming up, so it's going to be done for a couple of days. Very shortly here. So pretty much we're at the final pricing. I mean, we could see a little movement here in the next 17 minutes, I suppose. We'll watch it live. But this is important stuff, right? And I'll give you a few theories about what may be going on, but I'm still trying to figure this out just like you. So, all right, here's the big drop, right? Silver actually nicely recovering off the lows of the day. It was down as low as $74.40. However, I just want to briefly take a look at the big picture. Let's switch this to a monthly view. Okay, so silver right now, if it closes where it's at right now, it's going to close the month of January up 17.5%. Not bad, right? If I had told you back on January 1st that silver would finish the month of January at $84 and change, you would probably think, wow, that sounds like a great month. I just wouldn't mention to you that it's going to hit $121 in the interim, right? So what we're seeing here is just a lot of volatility, but the long-term uptrend, it remains intact. What we saw today, I think, was weak hands being shaken out of the market. It actually put silver in a more bullish position to resume its uptrend because those who are holding silver now are the strong hands. I'm actually holding more silver today than I was yesterday because I bought the dip. Leave me a comment down below if you did the same. And we'll get into the news in just a moment about these glitches on the metals exchanges. By the way, if you're new to the channel, and you might be if you're watching this, because I think that these unprecedented moves are going to get a lot of attention on this space, do me a favor, click the subscribe button. 2026, I've been saying it all month. It's going to be a crazy year for the metals, and I'll be covering it the entire time. And we're just getting started with this move today, really. There's going to be a lot more volatility on the way up, but this is really just kind of resetting the silver market and setting us up for the next leg higher, if you ask me. Let's talk about that. So I'm going to switch this to a weekly view now. And I had drawn a Fibonacci retracement in the earlier live stream, but I drew it from about this point. I think when you switch to weekly, you can see that this is actually the appropriate level to draw this from. And if I do that, you can see that this was a perfect retest of the 0.618 Fibonacci retracement level today, and we bounced right off of that. So if you want, you can go back and watch that earlier live stream, and you can watch us calling that bottom for the day in real time. We saw it touch $75, $74. I said, this is probably the bottom. This is the 0.618 retracement, and sure enough, it bounced off of that level. If you did some buying around that level, well done. Nice. You're already up fairly significantly on whatever you purchased if you managed to do it at the lows of the day. Me, I added to some paper positions. I bought some more miners. I actually opened a few leveraged positions, just some bets with a little more risk. Look, if the silver price rallies hard on Monday, I'll make some money. If it doesn't, I won't. Whatever. The big thing, though, is I actually bought some physical silver for the first time in a few weeks. And I'll show you what I bought. I picked up a roll of junk silver. I think when I bought it, it was actually $598 for $10 face of junk silver. It's under spot over at ST Bullion. They still have it in stock. You can check them out with the link down in the description. I also picked up one of these MS64 $10 Liberty Gold Eagle coins. Look, I want to show you something which shows you that a lot of buying came into this market in terms of physical bullion. Look at the pre-1933 gold section over at SD Bullion. Clearly, a lot of buying moving into the market. A lot of empty SKUs there. A lot of SKUs selling out. Now, to be fair, if you go down into the individual products, you can find some deals here still. But a lot of these are like numismatic coins, right? Here's a $10 Liberty coin going for, $5,000, $6,000. So these are going to be the last thing to sell out. But the ones that are closer to spot are selling out. So retail actually, I think, is getting, they're waking up with the dip. Let's see. I wanted to show you this too, the goldbacks. Check out the goldbacks. Gold was up over $5,000, right? That's kind of expensive. I guess it's corrected down a little bit, $4,900. That's still kind of expensive for me to wrap my head around, but I suspect it is going much higher, so I'm glad I'm not paying $5,600 like I would have been, like 2 days ago if I had bought some gold. But you can always get gold relatively affordably in the sense that you can get highly fractional gold in the form of goldbacks. But look, it looks like the goldbacks are getting gobbled up too. All of the small denomination goldbacks are sold out over at SD Bullion. That's pretty unusual. So I think it shows you that there's a lot of retail interest here, but maybe people don't have $4,800 to go buy a coin. I didn't, so I bought the $10 Liberty. It's a smaller fractional gold coin, but if you want to get even more fractional, here you can get 5 1,000ths of a troy ounce of gold for $45. Not bad. So anyway, goldbacks are always an option if you just want to put a few dollars into physical gold. Okay, let's talk about these glitches, because this was, to me, highly suspect, right? We had the London Metals Exchange closing down trading early in the session. It said they delayed the start of trading on Friday due to technical issues, temporarily stifling activity as commodities markets experience one of their wildest weeks. So you can imagine how frustrating that would be if you see the price of gold or silver crashing and you're trading on the LME and you can't place orders. It's not like I was selling on the way down. Did my paper portfolio take a hit today? Sure. But I mentioned earlier in the previous live stream, that's just kind of the cost of admission to these volatile markets, is occasionally there's going to be a drawdown. It's no reason to get shaken out. You avoid using excessive leverage, avoid using margin, and you can be a strong hand, which is what you want to be. This bull market's not over by a long shot, by the way. We covered this in the previous live stream, but just to recap, this chart right here, the double cup and handle that silver broke out of, this isn't going to resolve in, a couple months. This goes back 46 years. This is a bull market that is going to continue. And again, look, we're up 17.7% in the month of January. Okay? It's not like silver's bull run is over here, folks. Well, you just zoom out. Don't be overly myopic here. Zoom out a little bit, right? And you can see that the bull trend is still quite intact. Yeah, so the London Metals Exchange had this glitch, which is, conspicuous, but whatever, a little suspicious here. We'll never know exactly what happened, but something was going on there outside of the norm. And it's curious that there's always these glitches at the metals exchanges around times of high volatility and big moves up and big moves down. If you remember on the night after Thanksgiving 2025, so just a couple months ago, the COMEX had to shut down trading on silver because of cooling issues in their servers, right? For hours, nobody could trade. So, there's something going on here behind the scenes. Feel free to speculate in the comments or in the chat if you have a theory about what might be happening. And we'll talk about some theories here in just a moment. But HSBC suffers temporary system shutdown, stopping services in Hong Kong. This was reported in the South China Morning Post today. So HSBC in Hong Kong experiencing glitches for several hours as all of this, plays out in the metals market. Again, it's just kind of unusual that there's all these glitches. It makes you wonder. Let's talk about what could actually be happening here, because keep in mind, I mean, you could potentially hack these exchanges, right? I suppose. I mean, I'm not an IT guy. If any of you have that background, you let me know in the comments. But it seems to me if you had some kind of control, some kind of backdoor access, you could pretty much make the price of the metals whatever you wanted. And you say, well, why would you do that? Well, obviously to buy in at lower prices, right? If the banks, big players, the ones running these exchanges wanted to, say, move in and buy a huge amount of physical metal or buy a bunch of contracts and get long, close out short positions, etc., manipulating the price down via glitches, etc., it might be on their, on their menu of things to do, menu of options for how to accomplish that. This was a post from Nikki Shields. She said, how has the CME not triggered a trading halt or freeze after silver's down 20% and now 33%? Yeah, 38 at the lows of the day, by the way. A huge drop, right? 38%. It's pretty wild. Of course, a drop like that, it wasn't sustainable, and we did close well off the lows, or at least we're going to here in 7 minutes. But I wanted to highlight James Henry Anderson's reply here. I like James' analysis. He seems to have a pretty good feel for what's going on in the metals markets. I always check out his weekly bullion updates. But he said, because they have to raid the unsecured silver ETFs for cheaper 1,000-ounce silver bars in the West to then arbitrage and sell to the East for fatter profit margins and spreads. Yeah, bingo. Let me go ahead and like that. Yep. I think that is an excellent point, because right now, the silver price in Shanghai is about $105. That's where it closed. It'd be very interesting to see where that opens up on Sunday night, where the Shanghai Gold Exchange goes when it opens up for next week's trading. Look, with what's happening here, anything could happen, and it's kind of a speculative thing to make a call for the short term. But I would not be surprised if on Monday we see a sharp move higher in the precious metals. I mean, it might take a little while, might not happen on Monday, it might not happen at all, of course, anything can happen. But I think probability-wise, a pretty solid recovery on Monday is a very, very likely outcome of this sell-off. And this may have just been a ploy for the powers that be, the insiders, to buy these assets up on the cheap. And I mean, that makes sense. They're going to arbitrage our silver from west to east, drain their coffers, raid the SLV and the unsecured silver ETFs. By the way, he makes a good point. Unsecured silver ETFs. You can go read their prospectus, right? It's possible that there's just no silver there. So look, I trade options on the SLV. Sometimes I've bought it and sold it in the past, but I would never consider an ETF to be a substitute for physical gold and silver in your custody. And, a day like today is the day that you just love having physical bullion, because I have no plans to sell my physical bullion. It's long-term cold storage. And the number of ounces I have didn't go down today. Nothing changed. Actually, it grew because I took advantage and I bought the dip. Today is the day when physical metal really wins, in my opinion, if you're just holding it as a savings. Because, look, volatility is a guarantee. Although today's volatility was unprecedented, but it's going to get worse as the death throes of the fiat system continue to play out. It's not going to go quietly, right? We're on the verge, potentially, of a major shift in the global financial system. The world is dumping dollars. The world is buying gold. They're going to throw everything, including the kitchen sink, at the silver market. I think we saw that today, but don't expect this to be the last shakeout, right? But it was a big one, the biggest in history, I think. And that's exactly what it was, as I said earlier. It's a shakeout. Anyone who sold their silver down here, well, I feel bad for you, but some people did, right? Somebody was selling silver down here at $75, and now if they want to get back in, they got to pay an extra $10 to do so. And on Monday, I suspect they're going to have to pay a lot more. And it's going to be interesting to see things open on Monday, but we got to wait all weekend, right? So one of the factors that kind of contributed to the sell-off today, and I mentioned this earlier, was Kevin Warsh being tapped as the next Fed chair by President Trump. And this had impact for a variety of reasons. And I want to kind of point out why that may be a mispricing by the market. So one of the things is that this guy's viewed as a bit of a hawk. He's a former Fed governor. He works at a think tank right now. He said in a November opinion article in the Wall Street Journal that the Fed should abandon the dogma that inflation is caused when the economy grows too much and workers get paid too much. Inflation is caused when government spends too much and prints too much. So it sounds pretty good in principle, but who out there believes that this guy is going to stop the Fed from printing money? Like when the chips are down, the debt starts to collapse, bond rates are soaring because the world is dumping U.S. treasuries. Is he not going to run the printing press? Is he going to let the whole system collapse? Of course he's not. He's going to do what all the other Fed governors always do, and that is they run the printing presses when the chips are down, right? This is a buddy of Ben Bernanke. He actually served as a Fed governor when Bernanke was chair. And we all know how that worked out. I made this infographic based on the earlier live stream, and I thought it kind of summed things up pretty well. I mean, this is why we got the sell-off in the short term. Silver is overbought. We got a hot inflation report earlier today, PPI. I talked about that in the last live stream. And the CME just raised margin requirements, so it's a perfect storm for silver. It's a great time for the insiders to come down and try to smash the price down, run all the stops, get all the leverage out of the market, and then come in and buy everything up on the cheap. I'm sure that plenty of investors, plenty of books, when all in or close to it at the lows of the day, I mean, they're already up significantly. Now, that's not financial advice. I'm certainly not encouraging anybody to ever do that. Probably never want to go all in on anything unless you just, you got nothing to lose. But look, this was a huge buying opportunity today, and it still is the whole weekend. It's a gift, right? It's not on the lows, but you can still get silver a lot cheaper this weekend than you could a couple days ago at least, although, it's still more expensive than it was at the beginning of January because, again, silver is up. Let's see, we're 1 minute away from the close. Silver is up 19% for the month of January, okay? That's not bad. Not a bad month. Not at all. Also, we got an update on Iran. We mentioned this earlier. This could be a catalyst and, an unfortunate one for a huge surge in gold and silver on Monday. But this site, Drop Site News, so take this with a grain of salt. I never heard of them before, but apparently they're a reader-funded media outlet, and they posted this just a couple hours ago. U.S. military tells key Middle East ally to prepare for attack on Iran. Senior U.S. military officials have informed the leadership of a key U.S. ally in the Middle East that President Donald Trump could authorize a U.S. attack on Iran this weekend. Multiple sources have confirmed to Drop Site News. Strikes could commence as early as Sunday. The ally was informed if the U.S. decides to move forward. So it's not a guarantee that this is going to play out over the weekend, but it is a huge risk. And if in fact it does, you're going to see the price of oil, gold, silver, all that stuff surging, very likely, on Monday. At least that is my forecast. Hopefully cooler heads will prevail, but I'm not convinced that we're all going to hold hands and sing Kumbaya just yet. In fact, if you're just looking at things objectively, it appears that that is in fact not the case. So, look, you've got the weekend. Physical metal is on sale. I expect a lot of it is going to sell out over the course of the weekend, especially if we see any escalations in the geopolitical realm. And that's it. Leave me a comment down below if... Oh, I have one other thing I wanted to get to. Yeah, this was just weird. And also, it's a sign of how careful you have to be getting information in this space. So, there's all these Asian guy AI channels out there, and there's not like one definitive Asian guy AI channel. But this is one. There was one that got posted. An SGT report shared this, and I watched the video. The name of the video is Spot Price Crashes to $85. But the weird thing is that this was posted like 20 hours ago now, so before the crash actually took place. And I mean, you don't need to waste your time watching this stuff. It's just a bunch of AI slop. But basically, it was a video that said the price crashed to $85. It seemed to just be detailing some like non-existent narrative, like just a completely fabricated narrative. It also said that the price of physical bullion was like $190, which is not the case. You can go to SD Bullion and buy it relatively close to spot. I think you can get $999 physical silver over there for a couple bucks over spot. So the point was, this was going around on X, and SGT report said this is the video Asian guy posted last night, 15 hours ago. It telegraphed exactly what we were seeing today, $80 silver. How did he know WTF is going on here? Well, look, you just got to be very skeptical of these things. Eventually, if you post thousands of AI generated videos, eventually some of them are going to sort of ring true. But silver price didn't crash to $85 today; it crashed to $74, and physical silver didn't surge. But just be cautious with the information that you are consuming in this space. Kind of a PSA. These channels are just designed to get views and ad revenue, which, fair enough. I guess that's kind of what we're all doing this for to some extent. But some of us are actually trying to provide quality information and analysis as well, not just spam you with lies and misinformation to generate clicks and views. So again, just be cautious. These Asian guy AI videos, there's numerous channels. It's a weird phenomenon, but this is just the post 2025 world we live in now. Some call it the post-truth world, because you got these AI generated videos that can be difficult to differentiate from reality, and it's just getting worse and worse. So at least on this channel, I may use AI occasionally to assist with analysis and writing and things like that. I think a lot of people do that these days. But I am, in fact, made of flesh and bone, still a human being here reporting on the silver market, and I'm doing my best to deliver accurate information. Is the information that I present always 100% accurate? Well, to the extent that I can verify it, it is, but doesn't mean that some misinformation or mistakes don't slip through. But I will always do my best to bring you accurate information. You won't be getting fed, AI slop with an AI narrator just telling crazy stories about the silver market that never actually took place. It's a very strange phenomenon. But anyway, do me a favor. If you like humans producing content, not a big fan of AI, support the channel, click the like button, leave a comment, subscribe if you haven't done that yet. Follow me at x.com/stacksmarter. You can sign up for the free e-newsletter with the link down in the description. And that's it. Thanks for watching, everybody. Stay safe and happy stacking, and I will